Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Caliber Home Loans. At Caliber Wholesale, our products make us different, and our people make us great. Caliber Home Loans Incorporated is an industry product leader with a full offering of core conventional and government products, coupled with our innovative non-agency portfolio lending products. Contact us to learn more.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, and this is created exclusively for Mortgage News Network, brought to you by our friends at Caliber Home Loans. Trump, new president, craziness in the bond market, craziness in the stock market. Wow. Well, first things first, you've heard it from me that we should be in a cautious mode, a lock mode. Yeah, maybe I was a little bit early. I talked to you about that 200-day moving average, but boy, oh boy, those of you that took my advice and were cautious and protected yourself, you're really reaping the benefits. Your clients are reaping the benefits right now. So now many of you are concerned, and what happens next? And first, let's take a quick step back at what happened. So the markets were relieved on the equity side because it appears under Trump, once they got to thinking about it, less regulation could mean better economy, better economic times. And when you think about the fact that Dodd-Frank and the CFPB in the industry that we're in could be alleviated, yeah, that could be a really good thing for our industries as well. We'll see what happens, but that's the thought process, is that the economy can really grow. There's a sense of optimism, and stocks running with that. It's coming a lot at the expense of bonds, but also because now it was a done deal that the Fed was going to hike rates on December 14th. Now you have people like Fed Governor Harker who's saying, well, if Trump got, this was before the election, if Trump gets elected, maybe we have to wait and see before we can hike. Another excuse by these guys, right? They're awful. So the bond market would have liked a Fed rate hike. We've talked about this in the past. Stocks would not have liked it. The money would have gone into the bond market, and we've got a long, long history of seeing that over and over and over again. Fed rate hikes, bond market likes it. So now with that not as certain, bond market responding poorly. Plus we broke through some of those technical levels. You heard me talk about that 200-day moving average. I was worried about it. I was a little cautious, a little early, but sure enough, we were right on the money. Yes, we started to get negative mid-September as yields started to change in Europe. Sure enough, that came over here. We protected ourselves from that. But now that big move lower that we saw last week, what happens from there? Well, here's what we have to be concerned about. The levels that we're at right now are critical and they're dangerous. We could see another 200 basis points drop. 200 basis points drop in pricing, which would be about 0.5% higher rates. I'm not saying that's going to happen, but that's the danger that we run right now. 10-year Treasury yields could be looking to continue to move higher. I told you 2%, watch 2%. So many of you didn't think we could hit that. Yes, we hit 2%, now we're over 2%. And now I don't want you to think that yields are going to come back down and, oh, I'll play this and wait for this and come back down. Could they circle back a little bit? They could, but they're not going to come back to what you saw a month ago or 2 months ago. That's over, okay, for a long time. So don't think that that's going to happen. That ship has sailed. Can we claw back a little bit, and can we watch this carefully and get back a little bit? It's possible to do that. So here's the issue that we're having, is that under the Trump administration, there is talk of infrastructure bill, which, hey, that could be a great thing. Infrastructure bill could be awesome. We certainly need it in bridges and roads and airports and many things that you could think of that would be great. So how do you raise the money to do this? How do you incent capital to come in? Well, the laws of supply and demand. If you put more supply out there, more bonds that you sell, because that's the way you do it. You raise capital by selling bonds or notes or treasuries of certain types. You perhaps, with this extra supply coming to the market, have to offer a higher interest rate to incent individuals to now invest that money or put that money into it. That could be putting some pressure on things right now too. Nobody's talking about this, but you have to think 3 or 4 steps down the chessboard like some of the really smart investors do, and that could cause some issues. If that starts to become a more realistic, we could see yields continue to drift higher. So this is not a time to play games. It's never going to go up in a straight line. There will be times to take advantage of pricing and do that. And certainly we need to be nimble and watch that carefully. And hopefully you've joined MBS Highway because, we have navigated through this absolutely perfectly for our subscribers. They're really pleased. And if you're not a subscriber, what are you waiting for? I mean, your customers pay you a lot of money to be an advisor. Are you talking the talk or walking the walks? Be an advisor by advising them correctly. Talk to you guys next week. See you soon. Bye-bye.
Your reputation with your referring business partners depends largely on the lenders you recommend. This is why you'll want to choose a partner who shares your commitment to customer service. At Caliber Home Loans, our products make us different and our people make us great. A leading product innovator. In addition to our core conventional, government, and jumbo loans, we've created our own non-agency portfolio lending products. These enable you to assist creditworthy clients who can demonstrate the ability to repay. To learn more, visit us online at caliberwholesale.com.
This is Mortgage News Network.